Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny and Bert, the Dividend Diplomats. We are recording from each of our houses. We are pumped to talk to you today about another dividend investing video.
You know the drill by now. Smash that subscribe button. Give Bert and I a nice thumbs up. I haven't said it in a while, but let's turn it blue. Bert's been saying it in our other videos, but we cannot believe that we are about to hit 10,000 subscribers on the Dividend Diplomats YouTube channel. So thank
Lanny,
you.
I think we both know what needs to happen once we hit 10,000 subscribers.
You tell me, brother.
You listen up, Jack. But in all seriousness, this time we may actually dust off the WWE costumes when we cross that 10,000 and give you a special dividend watch list courtesy of our favorite wrestlers.
And that's the bottom line, because Bert and Lanny said so.
Perfect. Exactly. So Lanny, this is very exciting for a few reasons. This isn't just our typical dividend stock watch list, dividend purchase, dividend news article. We got another exciting brand new video topic on here. Do you want to give us a little bit of a teaser of what it's about, Lanny?
This is huge. So if you're an investor, a dividend investor out there, or if you've been watching the YouTube channel, you probably know that I've been investing into Vanguard's VYM ETF each Monday to not time the market and just to consistently get an investment out there every Monday. And I started doing that in around the middle part of the pandemic in July / early August. And though I've been doing that, I've always talked to Bert about, we got to see what's your strategy, what's something that you can invest in weekly or frequently, because him and I always had the conversations, about how hard it is to find that undervalued stock, or going days or a week without buying a dividend stock. And yes, to all the comments, it is addicting. You want that income to continue to grow. So what did our conversation talk about?
Well, I was going to say, well, you always focused on getting at least that weekly investment and then making other investments on top of it. I took the opposite approach. I'm like, I'm just going to look at what's undervalued and buy the stocks at that time, which, yeah, it led to that ebbs and flow of buying stocks or not buying stocks. But I still always managed to buy dividend stocks. Keep fast forwarding. It's very hard to find an undervalued stock right now. Like, we put our watch list together, but it is not easy. It is definitely not easy. And yeah, in hindsight, seeing how Lanny's consistent strategy has played out and seeing how VYM has grown, how his cost basis is trailing the market because he's just consistently adding, even though the price is going up, the time is now for me to start finding that consistent investment so that 8 months from now, I can look back and be like, you know what, I am damn happy that Bert decided to start doing this in the past.
It's just like John Cena. We might be calling him Bert Cena. Time is up. Time is now. Bert might be doing this each
that
week.
Is not going to be the costume I'm wearing in the video. I can promise you that.
Let's go, Bert. Bert's.
Yeah.
All right, Bert. So after we talked on our last video, that was live, a brand new light bulb that I just threw out there. And Bert's like, yeah, that was my plan that I've been meaning to tell you about. And if you haven't watched it, go back to watch the last video that we put out. Or was it two videos?
It was some amount of videos back. I think it actually might have been the last one.
Okay.
Who knows? It was in the same week. We'll give it that. But yeah, that was really when it hit, is I started building my watch list and I started looking for a company to put on that watch list. I don't know why it just hit me and why I didn't think of it sooner. There was just one company that stood out. We've talked about this. We talked about how it's one of our favorite dividend stocks out there. Heck, we even made a video, right, Lanny, about how this was the greatest dividend growth stock, right? Like, we called this.
GOAT. It could be the GOAT.
Yeah. And me, whenever we had these conversations, I tried to figure out the strategy. What did I do? I just stared at the camera like a deer in the headlights, didn't even think about it. But now I figured it out. And that's why I am pumped to officially announce that I'm going to start investing in Johnson & Johnson weekly for my portfolio, in my wife's portfolio, and try to replicate Lanny's Vanguard strategy with one of the GOATs of the dividend investing world.
The crowd's going wild right now. I can feel it, baby. I can feel it. So Bert, so that's going to be it. So now you're going to have a weekly dividend stock investment strategy. Is there a specific day that you're targeting for this investing strategy into Johnson & Johnson stock?
I've always been a Tuesday kind of person. No, I'm kidding. We're just going to do it similar to what you did, just the beginning of the week. just every Monday, market's open, put the market order in, 1 share in each of the portfolios, grab it at that price. Market goes up that week, great. I got it at a lower price than it ended. If the market goes down, also great. I know that my first purchase on that next Monday will be at a lower price and my cost basis will come down.
Only here do you wish your investment goes down in price. Only as a dividend investor investing into sound, fundamentally sound companies, do you wish that your value goes down when you're buying a company.
I know. It's right. You know why? Because you reinvest and you get more shares. But we don't worry about the market value for the sole reason of metric number 2 in our dividend stock screener. We focus on companies that have safe dividends so that when the prices go down, we're not concerned necessarily that the dividend's going to be cut, because ultimately we want to see our dividend income stream grow. That's what we really care about. Companies that have shown their ability to grow their dividend over time. Okay, that was the 3rd metric of our stock screener. So how does that tie into number 2? By reviewing the payout ratio and making sure it's safe, less than 60%, barring some catastrophic collapse of earnings. A few percent decrease in stock price doesn't concern me because I know that dividend is safe and the company has increased that dividend over time.
Exactly. And Bert, I'm going to ask you a few questions here for the community so they can understand more about Johnson & Johnson stock and why you specifically chose Johnson & Johnson stock as your consistent, no matter what, weekly investment. So what's one of those main reasons of why Johnson & Johnson is the stock to buy for you?
Well, before I get into the metrics of our stock screener, I love the company's portfolio. I mean, think about how they touch your lives. I love consumer staple stocks, but their brands are some of the best in the industry out there. And think about this. Think of how many households this can be found in, how many times you just pass this when you're going through Target, your Walmart. You got Neutrogena, Aveeno, Rogaine, Tylenol, Motrin, Zyrtec, Benadryl, Sudafed, Listerine, and Band-Aid. That's just some of the brands that they have. So just think about that brand portfolio. Just think.
I mean, there's some massive brands that you can find in your medicine cabinet, on your dresser, your nightstand, you name it. Johnson & Johnson is very well a big part of your life. And Bert, they also are doing something big because of COVID-19 and the global pandemic. So kind of with those brands, what also are they doing?
Nothing. No, I'm kidding. They're one of the 3 big companies that have the vaccine out. And what's cool is they have the single shot vaccine. So obviously they've been a major player in helping us solve this pandemic. Obviously, as shareholders, of course, you're going to love some of the revenue that comes along with it. But how cool is that to own one of the companies that when there's a major global health crisis, they're on the front lines and they're one of the ones that are picking up the phone saying, hey, we can help. Let's figure out a way to do it. And that's the kind of company I want to have in my portfolio.
So Bert, you talked about Johnson & Johnson stock having a very safe dividend payout ratio, not to get in all the metrics, but
sure.
Was the payout ratio safe enough for this dividend king to raise their dividend during the global pandemic?
It was. That's what was cool about this. So they always increase their dividend in April. So get ready, shareholders. You're about to get a nice increase next month. But what was cool is, think about last year in April, companies were slashing, cutting, suspending dividends like no other, because hell yeah, how did you know what your cash flows were going to be when the economy is just slammed to a screeching halt? Every company but Johnson & Johnson and some of the other great dividend stocks, not only did they just keep their dividend, they said, we're not just keeping it, we're going to increase the dividend. So during the toughest times, they still found a way to increase their dividend to shareholders. That to me, if they can do it during that time, that's a great sign for a dividend king to show that the dividend is safe.
And Bert, you can correct me if I'm wrong, but wasn't that a 6.3% dividend increase during the global pandemic?
I think you are, and I've learned never to question your percents because chances are they're almost right, even though you can just spit them off from your mind.
And Bert, I know you found this amazing dividend stock to buy because of the glorious Dividend Diplomats stock screener. So quickly, did you want to go over those 3 wonderful metrics that are included in our screener? You can do it really quick here for the community.
You bet. Those 3 metrics: PE ratio less than the S&P 500, payout ratio less than 60%, and history of increasing dividends. So let's break down each one of those for Johnson & Johnson. And this is why I ended up deciding to do this strategy. Currently, their PE ratio, looking at their current metrics, is 16.9. I got that using a current price of 160.77 cents and forward earnings of $9.51 share. Taking a step back, that's way below the current market, which I think in one of our previous videos, we talked about how the PE ratio of the market's over 40. Insanity. But even historically for the S&P 500, it's typically in the low 20s, maybe even the high teens outside of this extreme situation that we're in. And that's what I love about Johnson & Johnson. And I don't know why, my gut just always tells me Johnson & Johnson's never the cheapest compared to some of our other companies that are way below that 18 to 22 that the market typically is. But I always feel like their PE ratio is just somewhere in the high teens. Like they're always trading somewhere between like 16 and 18. That's just, it may not be a hard fact, but that's just what my gut tells me. It's never like an extreme discount, but it's always a slight discount to the market.
Yeah, I would have to agree with you, Bert. So Johnson & Johnson, another reason why they're a huge dividend stock to buy has got to be, again, like you said, the safety in that dividend. So Bert, with an analyst expectation of $9.51, what's Johnson & Johnson's current annual dividend and what is that payout ratio?
It's perfect. Their payout ratio is 42.5%. We say it's perfect because we think that perfect payout ratio is 40 to 60%, as that gives you the nice, perfect reinvest your earnings into the business and pay shareholders a dividend combination. So yeah, plenty of room to continue growing their dividend going forward. And then going into that third metric, the history of increasing their dividend, they are a dividend king. They've increased their dividend for 58 consecutive years, which is just insane. And plus, we just talked about here, they increased their dividend during the worst crisis that could face some of these companies in over a decade. So that's how you know a company is good. They've now increased their dividend through the pandemic, financial crisis, tech bubble, and all those other big issues that have happened in the last 58 years.
I'm sure, Bert, once you got all the stats, you pulled a Kramer and you said, I love this stock.
Yeah, and I hit buy every single Monday.
And because of Bert's analysis right there with Johnson & Johnson as his dividend stock to buy right now and what he'll be doing every week, we consider them good old reliable because that dividend growth rate on average is always in that 5 to 7%, just consistent. I see no reason why Johnson & Johnson won't be doing at least a 5% increase in April, probably not greater than 7%.
Yep. Right there with you, Lanny. I agree. I don't see any reason why they would go away from their history, and that consistency is unbelievable. I love it.
So Bert, so tell us about what your strategy actually is, and how much, what's your goal, how many are you trying to build, and for how long?
Yeah. So right now we're going to be buying 1 share per week, taking it through the rest of the year. That would give us by the end of the year that 41 shares in each of our portfolios for Johnson & Johnson. That's built onto our already current position, which is, and I did the calculation, Johnson & Johnson is about 1.2% of our current portfolio before I started this strategy. So I don't know where that's going to end up, but I would love to see an increased allocation for Johnson & Johnson. So yeah, 41 more shares each, 82 total on top of it. That would put us well over 100 shares total for Johnson & Johnson. How long am I going to do this, Lanny? Probably through the end of the year, because I think it would be freaking sweet to add 41 shares of Johnson & Johnson this year.
I mean, if you had 41 shares of Johnson & Johnson for you and your wife at 82 shares, this is around 160. You're talking $13,000 going into Johnson & Johnson. And, and again, you're just kind of not thinking about it. You're just letting it happen. And that's going to equal over $330 in forward income.
Yeah. Some nice capital can buy right there, right?
Capital,
Yeah.
But you take it easy,
But in all seriousness, at their current prices, what's cool is this isn't going to stop me from investing in other stocks. It's only $320 per week, and we've shown that we're going to put more in through some of our purchase videos. I mean, it's a lot. Don't get me wrong. I'm just excited because you're right. It's going to be automated. I'm not going to think about it. It's just going to happen, and then I'm just going to continue finding other undervalued dividend stocks to buy.
It's really it's going to take that emotion and frustration that you would have for whenever we would talk on a Friday or Saturday. I didn't buy anything this week, or I only bought this. I should have bought more of something. So
yep. So at least I'll know that I'm buying shares of some good old reliable, one of our top 5 foundation dividend stocks every single week. whether or not I buy anything else. I will at least be adding $8.08 to my forward income on a weekly basis, which will increase when they increase that dividend here in April.
As you heard it here, Bert's new dividend stock to buy investing strategy, Johnson & Johnson stock, below 17 on the price to earnings, below 43% on the payout ratio, above 2.5% on the yield with the 5.2, 5.3% dividend growth rate average. Bert, any other words you want to say about this dividend stock buying strategy?
It was Johnson & Johnson barely eked out Snowflake, but in the end, Johnson & Johnson is the one that came out on top for this purchase strategy. But again, no, in all seriousness, I'm excited to take on the challenge that Lanny took on when he started with buying the Vanguard. And I'm excited to see the results at the end of the year of similar to what Lanny is seeing right now with his portfolio.
And everybody in the community, I know there's been a lot of other commenters about what they've been doing every week, so please share in the comments below what other dividend stock you buy every week, no matter what the price is or what Mr. Market is doing. Please share it below because maybe we can get a little conversation going. Do you also do Johnson & Johnson that Bert's about to do? Do you buy Johnson & Johnson stock every single week? If you haven't already, definitely like the video.
Yep.
Give us a subscription. We truly appreciate it. We have a lot of fun here teaching everybody.
Get us to 10,000 so we can do our WWE video. Come on, people, help us out here.
If you smell what the diplomats are cooking. Now, again, this is Bert and Lanny from the Dividend Diplomats.
Over and out.